reduce your stop loss. So it's same type of premise with like the inside bar type of thing is you're looking to how can you get a little bit of a better entry? That will be the thing with the inside bar, using it instead of waiting for the close. How can I get a little bit of a better entry? Or how can I get a little bit of a better stop loss? And I'll tell you what, I forgot to load up my recording. Sorry about that. Well, the backup recording, because whenever I don't do a backup recording, that's when the main one crashes. But we've spoken about this before in trading, and let's put it like this. So there are different ways to be successful in business in general, right? There is basically, you can offer more products, or you can increase the margin that you have on your current products, right? So let's say that you're a restaurant, right? Because I know nothing about restaurants. You're a restaurant and you start off as a hamburger place, right? Hamburger is your product, right? Imagine hamburgers being your main trading strategy. You guys with me already? Did you get thrown off by hamburgers and start drooling? I know you guys overseas, it's just about lunchtime. Tony's somewhere having a face-to-face conversation with a hamburger, like, oh, yeah, right? Homer Simpson grumbles. But so you're a restaurant, right? You sell hamburgers, right? That is your product. That is your main trading strategy, right? So you're doing good, right? Your company, your business is making money. Your trading strategy is producing money. But of course, like every greedy capitalist pig, we want more, right? We want more. How do I make more money? So as a restaurant owner, what's one tactic you can take to make more money? Right? You're a hamburger store, a restaurant. Right? Roberto says sell alcohol. Okay, well, yeah, you're right. I mean, yeah, you're right. Yeah, sell alcohol. Yeah, that's okay. Yeah, I was gonna say like French fries. Offer fries, offer a side, but okay, alcohol works as well. Can't go wrong with that. But offer another product, right? Offer hamburgers and fries, right? The fries would complement the hamburgers, right? You order a hamburger. What else do you want? Hey, you order fries, right? It's another trading strategy that complements your current trading strategy, right? Or sell hot dogs, right? Now you give people a different option. Now you're going from, hey, instead of just being a counter trend trader, which would be hamburgers, now I also offer a trend continuation trading strategy, which would be hot dogs, right? So you're diversifying what you're doing. It gives you more opportunities, right? Instead of just getting people into your restaurant that want to eat hamburgers, now you get people into your restaurant that want to eat hamburgers and hot dogs, right? You see how this is all playing out, guys? Again, the food references was probably a bad idea because everyone's starving, but you're adding different opportunities to get customers in, right? You're adding different trading strategies to take advantages of different types in the market. So that's one way to do it. Another way is that you don't add anything else, right? You keep your hamburger product, your single product, and instead of worrying about adding other things, you ask yourself, how can I get the margin down, right? So how can I be more productive with the single strategy I have? And what do you think would be a tactic of doing that, going to the hamburger reference? If you're only selling hamburgers, but you want to make more money off of your hamburgers, what are two things you can do? I'll give you one. You can raise the prices, right? If you raise the price of your hamburger and you sell the same quantity, you will make more money, right? Raising the prices would be equivalent to getting a bigger target projection, right? You raise how much you get on each trade, right? Your average win is increased, right? Your average sale is increased. Another one would be, get cheaper suppliers, right? Whether that's buying in bulk, whether that's negotiating, say, hey, we're doing this and I got this other supplier that gave me a bid for this. And you know what? I'm thinking about going with them, right? Get your products, your hamburgers, your hamburger, your buns, your ketchup, whatever else, relish, all the toppings, right? Get it for cheaper. So now you're still selling the same product. You're selling it at the same price, but it costs you less to acquire. Therefore, you're making more money. Trading is the same way, right? In example A, you can add more strategies. You can diversify. You can have a daily chore strategy on the daily chart. You can have a counter trend trading strategy for swing traders, right? Support and resistance trading. You could be a day trading, a trend trader on the range bar charts for 3 hours a day on the range bar charts, right? You're hitting on all different kind of cylinders there. Or you can look at your strategy, and of course you can do all of the above, right? You can add more strategies, add more options for food, and decrease your margins at the same time. But you can take your one strategy that you're doing, and if you want to make it more efficient, you can ask yourself, how can I become better at target taking? Or how can I become better at stop placement? And both. And something that you may want to look into, right? If you're doing a situation like you can see in front of the chart, and you're selling it at the lower low, lower close, currently with your ATR stop above that level, right? That 30 pip ATR stop above the highs, you're looking at a 61 pip stop loss. What if you go back to business? What if you go through the charts? What if you start noticing? And this is why it's so important to continuously take notes, right? I spoke to a trader the other day on Facebook, and he was, man, I wish I remembered the conversation. But the conversation was essentially about, hey, Akil, I get bored taking notes. I find it to be redundant. And I was like, or I think it was, I'm not sure if it was taking notes or tracking trades. One of the things I'm like, yeah, it should be. I mean, would you guys disagree? I don't think it's very exciting to log stuff every day. I don't, nor do I think it should be exciting. It is kind of, it's paperwork. Who likes doing paperwork? Right? Who likes filling out forms every day? Most of you guys that work, you probably, there are probably so many checks and balances that you have to do for some aspect of your work that is monotonous and horrible, where it's every day you've got to sign a paper, right? For track and field, for coaching, guess what I have to do? I have to take temperatures every day. I've got to go in, I've got to put in practice hours, I got to record temperatures, I got to sign it by the end of the week, right? I don't like doing that. It's the dumbest thing ever. 98.7. Oh, today, 98.6. Oh, okay. Right? It's stupid, but it's part of the process. You got to do it to keep track, those checks and balances, right? Trading and taking notes is the same way. But if you add the part of taking notes where you're consistently trying to improve your strategy, evolve, you're also doing a little bit of analysis. You're looking for tendencies in the market. You're looking for things that maybe could help. So maybe you're a 3-bar reversal trader. You're either taking all of these trades, you're just eyeballing them, and you start noticing, you're like, hey, man, like I noticed in these 3-bar reversals, like once you get that 3rd bar, right, price rarely comes back, on the winning trades, price rarely comes back above that 3rd bar. Now, on the losing trades, obviously it does, but once price comes back above that 3rd bar in the losing trades, right, it typically never comes back. So maybe you start putting 2 and 2 together, and you're like, okay, well, what if do I need a stop loss, an ATR above the highs? If that's the case, what would you guys say? If the majority of the trades that break above that 3rd bar end up continuing higher and stopping you out, is it safe to say that you can know you're wrong well before that stop loss? Now, again, I'm not saying this is the case. These are the questions that you would ask yourself. You'd have to go back and obviously look at it, right? But let's say you're someone that's consistently taking notes and you come to that conclusion. You're probably saying, man, I can lose for much cheaper, right? And that's not a bad thing, right? I think, and here's the difference. I think a lot of traders will look at it and be like, how do I avoid the loss, right? Which I think is common. I think as new traders, that's typically one of the things that we look for is how can I get more wins? How can I avoid more losses? I think once you've accepted the fact, this is going to sound bad. Once you've accepted the fact that you are going to be a loser, right? I'm a historically 55% trader, right? So if I've accepted the fact that I am essentially going to lose half the trades that I take, right? I've accepted it. I'm okay with it. I tried to fight it. I lost that fight. And now it is what it is, right? That is me, right? Once you accept that fact, the question then shifts from how can I get more wins and get less losses, right? And it goes to, okay, well, how can I win more when I win or be more efficient with my targets? How can I lose less when I lose? So if you take a situation where you have a 61 pip stop loss because it's an ATR above the highs, right? And you notice from all of your tracking and testing and data collection that, hey, most of my losses or most of the time that price action breaks above the third bar, it never comes back. Well, maybe you start asking yourself the question, well, what if I put my stop loss 10 pips above that third bar? Well, now all of a sudden, I've got a stop loss that went from 61 pips to 26 pips, right? So I essentially cut my stop loss in half, right? Now think about all the losers you take throughout the year. Think about all the losses you take on whatever this strategy, this entry technique is throughout the year, right? Maybe you eliminate a handful of them, right? Because some of them are going to be the ones where you get the weird candle that wicks above and then comes back down, right? So they're not all going to be, it's not all going to be beneficial. You are going to miss some winners. And this is why you actually have to track this stuff. But in general, if you can reduce the majority of your losses in half, is that not a major benefit to your trading? In a sense, that is you winning more. This is what I always say about addition by subtraction, right? Reducing your average loss is just as good as finding more wins, right? Because the truth is, you're, and I hate to be a Debbie Downer, typically your strategy is what your strategy is. Like, I'm sorry, you're not going to be, unless you're making significant changes, you're not going to take a strategy that wins 50% of the time and all of a sudden turn it into an 80% strategy, unless you're sacrificing something on the back end, right? It just doesn't happen. It typically is what it is. It's like a professional athlete, right? Someone usually is what they are, right? If you're a good 3-point shooter, that's what you are. You could improve a little bit, but you're not all of a sudden going to be dunking on people. So you maximize what you can do. But that's a question that a lot of more experienced traders start to ask themselves. I like to say after they've given up on getting more wins, after they've gotten to that fact where they give up, like, man, okay, I'm not going to get more wins. I'm not going to avoid more losers. And then this is like the secondary. Okay, well, let's settle for this. And then they start realizing that this becomes a little bit more important. And that's been a big thing in my trading. That's it's been massive to me. Just becoming, again, two things for me is becoming a little bit more efficient with target placement. And that means, like, I used to overshoot targets where my targets would be a little bit lower than price. Actually, I'd be right on the directional prediction of the trade, but price actually wouldn't get to my target. So it'd be kind of a waste. You'd be happy that you predicted it right, but you never actually make any money. So getting a little bit more effective, more efficient with target projection. And then reducing stop losses is big. And again, reducing stop loss could be from actually physically reducing your stop loss, or it could be by trying to get a slightly better entry. Both of those will achieve the same thing. They're going to give you your average risk is going to be lower per trade. So that is something to consider, not just in this example, but in every avenue of trading. All right. Rant over. Rich says